Good evening, everybody. Kind of a chilly, we're already in March. All right, we might be seeing a change of investor sentiment going on right now in the markets, which means we might have to change some option strategies. So as we can see, when they broke down through the wedge, the Dow sold off pretty hard. But today we have obviously a very positive trading day, a morning star signal. But we're kind of in a transition stage that notice where they couldn't close the Dow today. Still closed it just below the T-line. Now that might be splitting hairs, but remember, we've got a very strong statistical probability that if they're closing below the T-line, we're still in a downtrend or investor sentiment hasn't changed yet. So this transition phase, and I should have changed this to engulfing. We had a bullish engulfing signal in the NASDAQ. Stochastics in the oversold area. But we're still below the T-line. So even though we might see some positive trading, we still have to have that final confirmation. And yes, the S&P did a bullish engulfing left-right combo off the 200. But we still need that final confirmation. So now that final confirmation may not happen tomorrow or the next day, but what it's kind of telling us, and now that we're in an oversold condition, we're starting to see a change of investor sentiment. Maybe it will take off right away, maybe it will take a few days, but you can see there is buying or indecision down at this area. Now that indecision can be illustrated in charts like Google, where you started seeing a lot of indecisive trading, doji, kind of inverted hammer, doji, then a left-right combo. Well, that would have told us definitely if we were short. Remember what our first clue is that there might be a change coming? Look how they gapped down the doji in the oversold area and then traded positive from there. Remember where do most people sell? They panic sell at the bottom, and that's where the Japanese rice traders say when you see a gap down in the oversold area, start watching for a reversal. Now, when the biggies start changing direction, that might be also an illustration that there's new confidence, a bullish confidence coming into the market. But that's not being demonstrated across the board. You can see in Amazon, nothing yet has changed the direction. However, we can start seeing that there's a change of the nature of the market, meaning starting to see some buying occurring. Now, we can take advantage of that, where we can see like a J-hook, fry pan bottom, and we know that a trend kicker signal usually illustrates a lot more upside based upon a bullish trend kicker signal. And so if the market is turning over, or at least in a transition stage where it might be bottoming but not heading up just yet, we can still take advantage of which charts are showing the strongest bullish sentiment coming in. So GSL was one, and the nature of the market is any positive earnings reports are usually creating a reaction that allows you to pick up some good trades, over the next few days. AI, that's was it C3.ai, artificial intelligence had closed up here after hours after their earnings. Now, what's that tell us? If it starts opening here and trading positive, basically we've got that best friend signal breaking out through this downtrend, and we're in market conditions where anytime we're starting to see that best friend signal, there's usually more follow through. So we've seen that, and again, I kind of keep stressing, this is the advantage of having a chat room where everybody's looking for the same signals and patterns. Oh, I should know who pointed this one out yesterday. That made for a very strong move today. A few days ago, it was Mux, best friend signal, bullish confirmation. Yesterday, it was Nerdy, best friend signal, bullish confirmation. These are the likely starts of good trades, not because all of a sudden they've become good. It's because the nature of the market right now is rewarding these best friend signals with continued upside. Again, not every chart or every trade is showing bullish influence. Still short Rivian because of the dumpling top, the bearish kicker signal, and today it traded lower, did a doji, but this sets up for a very strong trade that if it opens lower and does a bearish doji sandwich, what's it telling us? This bearish dumpling top is now going to start a lot of pressure to the downside. I know, I mentioned all of them, Magic. I make it a point so that you aren't rolling around not knowing. It was Dual, D-U-O-L, pointed out in the chat room. Now, let me ask you this. Do you have eyesight problems, Magic? Could you not read that? Every chart that I do, even if it's got the name on it up here, I print it right here big so everybody can see it. We also have Netflix. Market was up strong today. This closed as a doji, telling us that if they open this lower tomorrow, creating a bearish doji sandwich, that makes for an excellent short. And this is what we're going to be kind of emphasizing on Saturday, is what strategy should we be using right here as far as an option trade? Well, you don't want to be buying puts because you're already in the oversold area. So this is where we kind of look at kind of where we decide maybe we're going to do a bearish spread, put spread, much more viable at this point. So whenever we're in a market transition where we could be heading up, we're not confirmed yet, but we're probably in the oversold area, that's where it becomes very important to see how the market's open tomorrow. Now, if we wake up and the pre-market futures are showing the Dow's going to open up down 120 points, well, that's pretty much telling us we're still in a downtrend because they're not going to come up through this level. If they looks like the Dow's going to open up another 120 points, yeah, that tells us this is a reversal signal confirming. So with that in mind, again, Saturday we're going to be doing a mini spotlight training on what the advantages are of the specific signals and pattern option trades. So these, even though they're short, meaning they're scheduled for an hour, but we usually go at least 2 hours, come join us. You get a lot of information. So With that, we've got option trade setups in the specific market directions. Let's see. Okay, and Becky just put in the link for that. All right, so now we're going to move to live charts. Let me see if this works. Whoops, how close did I get, Jim? Not very, okay. All right. Well, I'm going to do this then. I'm going to turn off this. And is this strategy in confirmation? In 8 EMA. Franklin, make that. Jim, is this strategy in confirmation? Okay. Franklin, don't understand the question. The 8 EMA, the T line, is yeah, I'm trying to figure out what your is this strategy in confirmation? Yes. The whole point of the T line is that it acts like a natural support and resistance level of human nature. It works on all time frames. Doesn't matter whether you're trading off the 10-minute chart. This was today's 10-minute chart on Joule. Yeah, so these charts are what are called fractal. They look all the same no matter what time frame you're doing or you're using. So here is the simple strategy to use using the T line. Very simple concept. If you see a buy signal to close above the T line, you're in an uptrend until you see a sell signal to close back below the T line. So Bohr, we took some profits right in here, but we bought it back right here because we could see there was a J-hook pattern setting up. And what is our final analysis of this trend? As long as we're above the T-line, we can stay long. If the Dow opens higher tomorrow, does this confirm a change of trend or a dead cat bounce? No, at least tells us we're probably now heading back up. Again, because of that basic premise that if we see a buy signal and a close above the T-line, now remember, you have to have a close above the T-line. So if you were buying on positive trading tomorrow, and then it finally closed back below the T-line, if any of the individual positions you bought are showing that same type of characteristic or the same chart patterns, close it out. Oh boy. Dang Jiminy Christmas. I have one to show that illustration. Hold on for 1 second. Let me see if I can find it. Oh, I must have taken it off already. Can anybody remember what we looked at the other day that had a bullish signal but then closed back? I don't think it was fuel cell, was it? No. Right, there, thank you. I was going to remember it. So here's a perfect example. We had a best friend signal, a close above the T-line. It opened a little bit lower but started trading positive, made for a good buy. But then when it came back down through the open, the very simple logic of candlestick analysis is, if they open up positive and trading positive, it's creating a green candle. But as soon as they come back down through the open, creating a red candle, you can immediately say who's in control. The bears are in control. So that's part of that 30% probability that if it's the trade's going to work 70% of the time, but if it's that other 30%, close it out right away and move on to something else. Because what you can see what happened after they failed to break out. Still continue to sell off. So anytime we have a trend, all we have to do is say we want to stay long as it doesn't close below the T-line. Well, there's bad hair days where they open below the T-line, but they close it above the T-line. Oh, this one. That was pretty scary. But then it started moving right back up, and where did it finally close? Obviously back up above the T-line. What's that tell us about our uptrend? The probabilities are extremely strong that our uptrend is still in progress. And now we've got kind of a belt hold signal. And what do we know is the mechanics of a belt hold signal? They wiped out a lot of sellers. Now there's any buying is going to be confronted with less selling or less sellers, making that uptrend still working. There was another one today that did a belt hold. Maybe that was the one I was thinking of. So there are a lot of times where if I've got 10 positions on, I don't want to be spending 45 minutes at night trying to figure out what to do with each position. I can look at this chart and say, up, long, still above the T-line, still above the T-line. It takes all of maybe 2 seconds to say, nothing to do here, let's just stay long. With AEHR, that was trying to do a belt hold type signal. Now remember, a belt hold is when they gap it way out of the trading range and then bring it back up into the trading range. However, because this was not confirming a true belt hold, at least now you know what your trading strategy would be. If you stayed long, anticipating it's going to move back up, if it opens lower and starts trading lower tomorrow, that means this selling is back in control, close out right away and go on to something else. Our CSTM, there's your best friend signal. Now here's again another very strong illustration of why the T-line acts like a natural support and resistance level. Because nobody has this on their charts. And notice where it moved right back to the T-line and started trading back up. So anytime we see that best friend signal, the assumption is we should be heading in this direction. The other assumption is if they pull back and they close below the T-line, that probability of the uptrend now has disappeared. CIVI, same scenario, best friend. This is what we expect coming off a strong up move at 45 degree. Now this again makes the analysis of the trend very easy. As long as it stays above the T-line, you just stay long until you see a candlestick sell signal and a close back below the T-line. A best friend is your best friend. It's a doji followed by a gap up. Remember, a doji represents indecision. That gap up tells you what their new decision is. The reason we call it your best friend is because we've got about 18 combinations. Now remember, there's 12 major signals. There's 6 or 8 candlestick patterns. But then we can put them into a, I want to say a quantitative list. and there's about 15 or 18 signal combinations that give you extremely high probabilities that there's been a change of investor sentiment. We have the best friend ranked as number 1. Now that doesn't mean that number 1 is good and number 15 is bad. It just means they're all good. Just kind of put them into a ranking. The reason we put the best friend signal in the number 1 spot is not only does the magnitude of the move or the trend direction very strong, but the magnitude of the move is very strong. And the third element is the frequency of these is very strong. It's not like you're finding one of these every 2 or 3 weeks or a month. They occur almost every single day. Best friends can be bullish or bearish. Oops, that's your bearish kicker signal. Thought I could swing right into one that was a bearish best friend. No. I'll find one. Yes, they work in both directions. After that day of indecision, it's a strong price move after that day of indecision. This is what you call, somebody asked about a kicker signal. Yeah, I think we got the kicker signal ranked about number 4 or number 5. Not because it's a weak signal, it's because the frequency of that signal is a lot less. So here's a bullish flutter kicker signal, which is a very high probability day trade as well as a swing trade setup. When they were trading in this direction and the next day they gapped up and did a doji, what was our alert? There was a change of investor sentiment. The fact that they gapped it up. Now what can we apply to that chart? The doji rule. We know that the price, if they open a positive after a doji, they're going to move in the direction of how they open it. So when they open it positive, these are so powerful or so high probability. Everybody's always saying, well, what if I buy in positive trade and it turns around and goes the other way? Yeah, you close out the trade. But the probabilities are that it's going in this direction. What that probability is, it's high. And this is what we're in the process of doing right now, is getting a quantitative number on if you buy a best friend signal, on positive trading, if it opens positive the next day, right now a raw statistic is that 66% of the time it's going to trade positive. Now that doesn't seem fantastically powerful as far as statistics, but we know what should happen if it trades positive. We also know what it shouldn't do if it starts trading positive. It probably shouldn't come back down through here. So even though that's a 66% probability, we have a much higher degree of probability that either you're going to break even or make a slight gain, with the other 66% prospect that you're going to make a good strong gain. So now, where was I before I got off track? So we don't know what the statistical probability is of a bullish flutter kicker signal. Now remember, the kicker signal is one of your strongest signals. A bullish flutter kicker signal has another advantage to it. On a kicker signal, you might say, or might see it by a quick scan, or somebody in the chat room saying, hey, look at XYZ, it's gapped up above yesterday's open and trading positive. We know that's a kicker signal. We might have to scramble around and figure out where we're going to get the money, or if we have to sell something else to get money. Whereas on a flutter kicker signal, if we see this at the end of the day, now we can already make plans that if this opens positive tomorrow, we have our money available. It means we might be selling another position right on the open and flipping into this, or pulling money into the account, whatever. It allows you to set up for that trade. I know there's probably a bunch more that, there's an INSW, J-hook pattern. So we've got, again, some trade setups that if the market opens weaker tomorrow, we know a dumpling top is going to create a very strong price move. If this opens lower, a doji sandwich with that type of magnitude here is telling us this dumpling top is now, they're pulling the plug. Same thing with Netflix. We can see what the trade setup would be, that if this opens lower tomorrow, doing a bearish doji sandwich, telling us that this level is not acting as support anymore. Now we have a wave 1, wave 2, and you can see where wave 2 failed. Right smack dab at the 50, right smack dab at the T-line, rolling over. If this opens lower, what do we expect? Wave 1 and wave 3 are going to be the same. Now, that's also a function of if we wake up tomorrow and today's exuberant buying was just kind of a bounce and they're opening things lower, at least we have a trade set up that we can go after immediately. So the biggies, this is why you want to know what the nature of a signal is. You can see on NVIDIA that there's kind of a top right here, and when they gapped it up the other day on the good earnings, notice how indecisive it was because of that spinning top doji. The next day they opened it a little bit lower. Let's make this bigger. Indecisive. Took it back up. Look how they opened it positive and closed below where they opened indecisively. What was that starting to tell us? That maybe there isn't a lot of enthusiasm or a lot of bullish strength in this, and especially kind of here at a top level, get ready to take profits if you were long. Now today you can see what happened. Did a bullish chart, or a bullish candle. But if you were looking at this chart, what is it telling you right now as far as who's in control, the bulls or the bears? Can't really tell. So there's going to be a lot of times where you can look at a chart and say, oh, I can see the direction. Then there's going to be times where you say, I can't really see any direction. Let's move on to something else. Did you say earlier that you do credit spreads? Yes. And that's what we're going to be going through on Saturday. The advantage of credit spreads as well as debit spreads. And that's also a function of knowing not exactly, but knowing the direction of what the overall market is doing as well as an individual stock price. Gives you a lot better clarity as far as what type of option strategy. Now, that kind of gets away from what most people do in their option trading. Oh, this stock's going up, let's buy calls. That's probably true about 20% of the time. Or this stock's going down, let's buy puts. You're probably still much better off during the other 60 or 80% of the time doing a credit spread, or I'm sorry, backwards, mostly a debit spread. And then if you want to make a high probability trade, but with low profitability, you do the credit spreads. Now, they don't make a lot of money, but if you do one of those a week, making money each time you make a trade, again, the correct trade ratio is much more important than trying to hit that big home run. The correct trade ratio will compound that money a heck of a lot faster and a lot safer. With a footer kicker, it looks like your risk would be smaller. Well, your risk is smaller based upon the fact that you know exactly what should be happening after that that signal setup. We know that if this opened positive and started trading positive, that we have an extremely high probability, and I don't know what that probability is. I'm going to say 85 to 90% probability that you're going to make money with that trade. Also, how about the color of the flutter kicker signal? Meaning this right here doesn't matter. Remember, a doji is a doji. Whether the little body is green or red does not matter. It's that indecision that you can see based upon that setup or that development of the doji. RK, yeah, I didn't get all of them today. Whoops, RK, DA. Yes, that was your, not so much your best friend's signal, but your doji. Remember what the doji rule, if it trades positive, you can be trading positive. Now, did this end up as a good day? Well, if you were buying here on the doji positive trading, there's another simple trading practice. You could be buying here, buying here, buying here, and then remember what we always say about, or not always say, what the truism about the T-line. The further away you move from the T-line, the higher the probability it's going to come back and test it. Which means if we get into a situation like this on your 10-minute chart, because if your 10-minute chart is trading right here, where are you on your daily chart? You're a heck of a long ways away from the T-line. Now, what happens to normal human nature? When things have gotten so far away from the T-line, which is our indicator, what's the smart money ready to do? Somebody's going to start taking profits. So the 10-minute chart gives us that example or that illustration of you're up that far away from the 10-minute T-line. The daily chart is way above the T-line. First time you start seeing some selling, take profits. Because what usually happens after that first profit taking tells you that's where the bulls and the bears come in equilibrium. You can always buy it back if it comes back up through that level. But until then, you stay out of it. These are just kind of little tidbits that we do day trading sessions. Okay, let me get back to so there's your bearish flutter kicker signal. Now, what was the alert here? Well, if you were long on this J-hook pattern, look where you were to the T-line, number one. Number two, just a truism, that if you're up in the overbought condition, and you're that far away from the T-line, if they gap it down and open and close right near the previous day's open, take your profits because the probabilities now are extremely strong. Just simple logic. If you're in an uptrend, they shouldn't be gapping down below the previous day's open. Then we've got the visual logic that says, look how far away we are from the T-line. Take your profits. The probabilities are now starting to go against you. Tom, yes. So when you see something like RKDA move that big, that fast, what do you think the smart money is going to do? Now, I'll go back to that chart. RKDA. If it's up here, it means something good could be happening. So when would you close it out? As long as it didn't close back below the 10-minute T-line. But up here, if I see something like this where I've got a big, huge profit in the matter of 2 hours, and I see the first signs of selling, if I think they're going to start selling off the 10-minute chart, I can flip to the 5-minute chart and say, what's the 5-minute chart telling me? Oops, got a doji, tried to take it up, bearish engulfing, stochastics rolling over. Are they going to hold it up? No, right here, close out the position. because that means your 10-minute chart is probably now heading for the T-line. Okay, let me, oops, they're not scrolling fast enough. Trade ratio, yes. You'd rather have much more correct trades than trying to get that big home run or trying to buy at the absolute bottom and selling at the absolute top. What we want to do is we want to get that fat part in between. With spreads, does the Analyze tab? Oh, I don't know, Michael. Probably not. There's a lot of things that do not work when it comes to candlestick analysis, like the Greeks, your delta, your gamma, all those things have no more relevance when you're looking at a candlestick chart, because the delta on something like this may be relatively flat. It's this that has the biggest, strongest price move. So candlestick charts, using them to see where there's going to be a strong price move, kind of negates all the other common indicators or common indicators that everybody uses. So here is Salesforce. There's your message. What was the message? The message was they gapped it up. Earnings are good. But it didn't look like they were buying. However, the message was they gapped this up. So what do we look for? We look for the end of that profit taking, and then that trend will usually start up in a 45-degree. Call bear spread could have early exercise as compared to put debit. It could, but most of the time, if you've got a spread on and somebody comes and says, oh, we want to exercise this, your brokerage firm's going to say, well, that's part of a spread, so they'll back off. Or if they do want to exercise it, then all you do is exercise your other half of that, and the positions close out and you move on to something else. The flutter, Michael, is that, is that flutter right there. If you took the flutter out, that doji, you'd basically have a kicker signal. If you took out that little flutter, basically have a bearish kicker signal. And why is that important? Because the kicker signal is your strongest individual candlestick signal. For confirmation in your trades, use reversal signals and overbought and oversold and the T-line. Do you use any other indicators for confirmation? Yes. The true reversal is witnessing a candlestick buy signal in the oversold area. However, a pattern, got to think of one real quick. Your stochastics may not be anywhere near the oversold area. Look at kind of your bullish signal here. Your pattern also is confirming. So not only do you want to know the 12 major signals. Now, the reason we call them the 12 major signals is because out of the 50 or 60 candlestick signals, these 12 that we've come up with, or I've come up with over the last 30 years, are the only ones that usually give you enough, not only the frequency of the trades, but the magnitude of the trades. So the others don't occur often enough to waste your mental time and energy trying to learn them. Now, I always tell people, if you, and I do this myself, I occasionally go back through my own books and look at all the charts real quick. It takes maybe 2 minutes to go through all of them, just to refresh my memory. Not so much my learning memory, but just my visual memory, that if I see something that reminds me of a signal, I might not have to know all the details on it, But the next time, if I happen to see one on a chart, say, yeah, that's a signal. Let me go there with that, see what that signal is. All right, let's see what else we got. All right. I don't even know where we are. Okay, so things like Apple. There's nothing there yet. So would I be trading Apple? Right now, if I was trading Apple, I'd be short. Now, was that a possible reversal? Possible, but it wasn't quite the halfway point wasn't quite a piercing signal. We did Amazon. Amazon, nothing there yet. Now look at the magnitude of that bearish kicker signal. Telling you got downside. Look where there could possibly be a reversal. Except the next day they gapped it down at the previous day's open and then closed it below that level. That pretty much told you they weren't going to go up through the 50. Your downtrend was still in progress. We did NVIDIA, Netflix, and then Tesla. We've had a lot of people, not a lot of people, but a couple people in the options room saying, well, could we be buying here? Should we be going short here? Right up until this point, what was the direction of Tesla? Couldn't really tell. It's kind of stuck between this level and this level. So what did that tell us about our trend? No trend. So now you're just guessing whether they're going to pop it this way or pop it this way. That's the that's the opposite reason to use candlestick analysis. Candlestick analysis is where the signals in the proper condition telling me I've got a trend starting versus where do I have an area where there is no trend. Let's move on to something else. The green line is the 3T line. It works in conjunction with the T line. Again, the further away you move from the T line, the more effective the 3T line comes in. In a put debit spread with 5-point strikes, how much are you willing to pay the debit amount? I usually keep my formula at I don't want to be paying any more than $2 for it to go to $5. And that's just kind of a risk-reward factor. Some people say, well, can't you pay $2.50, double your money? Well, you got to remember, you still have to contend with the direction and the time factor. So I usually make it a point to keep my price of a spread less than $2. Now, we did some spreads today on, oh, for crying out loud. Which one took a big hit today? How come I can't remember these things? Somebody from the options room. What did we put a spread on? Snow. Thank you. Jeez. Brain like a sieve here. So we did put spreads on this one because it was down big. And what is the expectation? More than likely, it's still going to head down. We don't know whether it's going to head down in this trajectory or this trajectory. So we bought the 130, 125s for $1.77, meaning if it goes to this level over the next couple weeks or below, that 177 goes to $5. Yeah, we bought the puts, and I'm going to do a spread on Rivian. And then again, this is part of the strategies that we go through over on Saturday. Is right here is a good place to be buying puts. Right here, after you've had a big percentage move and you're down here in the oversold area, but you're expecting it to go in this direction, maybe you're better off. I think I looked at a 15.13 today for 2 weeks out for 53 cents. to have it go to $2. That was a worthwhile trade. So the major aspect of putting on a spread is twofold. One, the direction. Where do you think it's going to go based upon that signal? And two, what is the math? Now, if you can't get into a trade, an option trade, that makes sense, then go to something else, because the whole point of being in or trading is to make money. And if the dollar amount or the price to get into that trade does not make sense, then don't do it. There's 9,500 trading entities out here. Even if you bring down your universe to stocks trading over a certain amount, you're still working with 2,700. And on any given day, a quick scan, meaning 10 minutes to 15 minutes every night, are going to find 5, 10, 15 good trade setups for the next day. Michael, that's up to each individual. If I am doing a debit spread, I'm looking for something 2 to 3 weeks out expiration. You get too far in front of a expiration, the price, even if it moves very big in the direction you want it to, the spread price might not move because both sides are moving at the same time. You want to get pretty close to expiration, because at expiration, obviously, without any more time premium in the puts on either side, gets to that full spread. So if you had a $5 spread that you just paid $1.77 for, and it trades below the lower end of that spread, meaning do a 130, 125, if it's trading below 125, that spread on expiration day should be $5. If you want to be a little bit more conservative and kind of clink along and making consistent small trades, that's where your credit spread. Yeah, and the credit spread also requires a margin. So if you're doing a $5 buying the or selling the 130s and putting $2 in, and buying the 135s, paying out another 50 cents, so you're putting a net of $1.50 in your pocket, well, you're going to have to use, they give you a margin requirement of $5. So, so again, that's all the things that we're going to be going through on Saturday. With credit spread, do you do weekly options? Franklin, yes. More than likely, you're going to do a weekly option. So if I was doing a credit spread on Monday, I'd be probably doing it for it expiring that Friday. With credit spread, you win even if the stock stays the same and goes down. Yes, the stock price doesn't even have to move. And sometimes, let's just say you sold a 130. Let's say the stock is trading at 126. I'm just picking out a number. And you sold the 130 for $2 and bought the, is that right? Yes, sold the 130s for $2, put the $2 in your pocket, and bought the 135s for 50 cents, so you netted $1.50 in your pocket. Well, that stock could even go up to 130, meaning it could trade positive, and you're still going to keep the $1.50 in your pocket. So not only if it doesn't move at all are you going to make money, and in a lot of cases it can even move in the opposite direction of what you want it to do, and you'd still make the full premium. Yes. All right, now I'm getting way off track here. But these are all the details that we're going to go through. Again, I've been trading options for, ever since the 1980s when I was a stockbroker with Kidder Peabody. And they started coming out with options on individual stocks. And, So I've been doing it for that long. All right, so again, AI. Can somebody see where AI is trading? Somebody mentioned earlier that it was up here at 25.10. Michael, keep asking. I'll go through them. All right, so it's going to be opening up here. That means this is now going to do potentially a kicker signal to the upside. So anytime you see the earnings and they open it here, very simple. Just go to your 10-minute chart and say, all right, are they, now that they've gapped it up, are they still buying? Well, you can see on the 10-minute charts, they were still buying. And what was the one element that would have kept you in these trades? The fact that once they took it up, maybe right here you would have taken some profits on that day. Then this would have been today. If you were buying again, because what would this buying be telling you? That they closed it here, a little bit of selling, and they were still buying. Now, why is this becoming, or why would we look at this as a less risky trade, even though it's up huge? First of all, we can see what the 10-minute chart is telling us. Secondly, that move right there told us there was a heck of a lot of new interest in this position, which is much better if you're an aggressive trader to be in something where the action is already there because of the charts than sitting in something hoping that it was going to go up further. Now, I don't understand why NRDY does not come up over here, so I'm not going to. So, NERT or CERT, there's your best friend. Now, if I was going to trade this tomorrow, I'm going to see how it opens and then watch my 10-minute chart. There's, to go back to the spreads, there are huge advantages in trading the spreads versus just buying or selling or buying puts or calls outright. The leverage is better, the risk is better, and the magnitude of the move can be much smaller and still make a very impressive profit. Okay, Zoo. Here's your kicker type signal. Now, a true kicker signal opens and goes this direction. But the fact that they sold it off and then took it back up and did it right off the 200 probably gives you that much more indication that the bulls have definitely taken control. AGL, same scenario. Anytime you see these big price moves, and right now they're coming from earnings, that at least it alerts you to the fact that they're doing a lot of buying. Now you watch to see how this opens. I use the 10-minute chart FC just as a bellwether. If I'm trading, which I'm usually trading, if I'm trading intraday, I might be trading hogs or cattle or the dollar. So I use the 10-minute chart as my bellwether. Now, if I was going to go short on this today, the 10-minute chart is telling me I can stay short. If I'm getting ready to go short and say, well, are they going to pop it back up? I can easily flip right to my 5-minute chart and say, well, the 5-minute chart is trading lower, so I can see a little bit faster. So it's all a combination of how active you trade. Some people might only want to do a couple trades a day, so they might use a combination of a 5-minute, 10-minute, 15-minute chart. When I used to trade the E-minis, I used a combination of a 1-minute, 3-minute, 10-minute chart. So it all is based on your activity or your nature's how fast you want to trade during the day. DXCM. So observe the obvious. When they came right back to the 50, indecision, that's all illustrated by the fact that you have a bunch of dojis. If this opens positive tomorrow, what's it telling us? One, it's confirming this signal, and two, it's telling us that this level is not acting as resistance anymore. And, oh, the message. So there was the message on, I did have it. There's the message. Now, how do we trade the message? We watch to see when the profit taking is over, and then figure there's going to be a 45-degree. Kind of the same scenario here. Little message, that told us the profit taking was over. That's when you could get into the trade. So everything built into a candlestick chart is just mere common sense put into graphics. Anytime you see a pattern, and then you can enhance it by, look at your little trend kicker signal. And they opened here, closed here. Then today they gapped it up. And what did that gap up tell us coming out of the, with a trend kicker? We know the trend kicker implies there's going to be more upside, which tells us there's a good breakout right here. That was kind of the same scenario we were using right here. Look where the trend kicker signal is occurring. Right about at the fry pan bottom breakout. What was the other one? Was this it? No. Darn, I can't remember. There was another one where there was a trend kicker signal right at the breakout area that after that was a long, made a good steady profit because of that. So here's your bobble breakout. Came up, failed right at the 200, pulled back kind of to your T line, now closes right here. What's that tell us? That tells us if they open this positive after a candlestick buy signal, fry pan bottom, we know that it's going to trade positive. What's everybody else watching? They're watching to see what's happening here at the 200, which if they see it open positive, they all start piling in because now it's up above the 200. Is it worth to monitor the volumes being traded? Yes. FC, all my charts are based on stocks that trade greater than $5 because of the, back in the old days when I was growing up, they wouldn't margin a stock anything less than $5. I think they do now where you can short it if you have to. And then I usually have a prerequisite of trading 200,000 shares a day. Now, if you're an options trader, you probably want to limit your universe to stocks that are trading more than 1 million shares a day, just so that the volume on your options are big enough to get in and out of. So you can set up your scan any way you want to. What is this one? So there's your, on Owens, Illinois. You can see the fry pan bottom. You can see how it kind of supported right here at the T-line. Then you can also see where the breakout level is. If this opens positive, what's it telling us? The fry pan bottom's breaking out, number one, and number two, wave 3 is in progress. Again, this is not rocket science. This is just using the information that the Japanese rice traders have provided for us over 400 years, showing us that human nature works the same way time after time. So here's a perfect example of where they sell it off and they bring it back up. Are they going to make it kind of a belt hold? Well, if they open lower like they did today, you start shorting immediately because that tells you the bears are winning. what are the benefits of a 1 minute, 5 minute, 15-minute charts following the same stock? Wouldn't you use just one time chart? Lou, you're only using the intraday charts if you're a swing trader. If I'm a swing trader and I am long this stock, well, look where we are. We're a good distance away from the T-line. That might tell us, well, there might be some profit taking up here. So that's when I'll flip to my 10-minute chart. Otherwise, I'm buying charts based upon, because I'm a swing trader, based upon the daily chart. So if this opens up here, I'm going to flip to my 10-minute chart and see if they're going to continue to take it higher. PSTG. When they gap down, there's your bearish best friend. If they open this lower, that means there's still a lot more downside. We saw that here on Electronic Arts, your bearish gap down. They've continued it down until today. Snow was another example where they've gapped it down, your bearish best friend. Make this. If they trade this lower tomorrow, breaking this level, where's our next likely level? Down in this range. With your entry chart. William, you're going to have to be more specific. RVMD. Here's kind of your bearish doji sandwich. Bearish best friend gap down. First target. And then the magnitude of that move, because of that force in the downtrend, which is your entry chart. Still the daily chart. If I saw a left-right combo right here, and I knew it was trading positive the next day, I'm buying it. Now up here, look how far away you are from the T-line. That's when I flip to my 10-minute chart and say, as long as I'm above the 10-minute T-line, because this, when it's trading up here, what is our visual alert? The fact that we're that far away from the T-line. So if you always keep in mind that the 10-minute chart acts like a natural, or the T-line acts like a natural support and resistance level of human nature, you can factor in the probabilities that if you're way up here after a big price move, go to your 10-minute chart, because that's telling you when you're up here, you're that far away from the T-line, get ready to start taking some profits. CYTK, or yes, K. There's your bearish best friend. And where did it occur? Broke that level. So what is the implication here? Shoot, they could be taking it all the way back down into this area. And Zeus, I think they got hit hard after hours and trading off. So not only was it trading up, let me make sure I'm saying this right. Yes. So it took it up and then reversed it. Well, that's like a bearish booster. That's your booster move, like a booster rocket. So it's at 118. Kind of right in here. All right, so that means they're not even holding up at the 50. So if it opens down here, then you flip to your 10-minute chart and say, are they going to bounce it from up here? or take it down. A lot of times they'll initially bounce it, people taking profits, and you watch your 10-minute chart. If it starts rolling over, that's when you can start going short. So again, everything built onto a candlestick chart is just common sense, telling you exactly what's going on, not what Kramer's projection is. It's what is everybody else's decision. So if you use candlestick analysis, you're doing what the charts are telling you instead of what somebody. I was listening to somebody, one of the analysts they have constantly on CNBC, and somewhere right in here they said, well, we're buying the stock if it comes down to 150, and if it goes lower, we're buying some more. Well, that was a perfect example of somebody that doesn't know which way a stock is going. They're just buying a stock because they think that at some level, that's where you should be buying. And that just kind of shows the fallacy of some of these money managers. Anyways, get way off track, which you know I never do. So right now we can see that the Dow futures are trading a little bit lower. So we wake up tomorrow and the Dow futures are down 120 points. That's a pretty good estimate that they're not going up through the T-line. Kathy, I know for years, and I don't know where they are now, but there were websites set up that when Jim Cramer said something, you did the opposite. So I always remind people that if something is working on Wall Street, everybody knows about it. And my question always is, do you know who the best analyst is on Wall Street? Well, I know you're all going to be sitting out there and thinking, I don't know. That's because if there was somebody good on Wall Street, everybody would know about it. And RK is exactly right. There's only one good analyst on Wall Street, and that is the market or the price of a stock itself. Okay, now I got way off track. Are there any general questions on candlestick analysis? Okay, JQ, this better be good because I'm going to tell my Sandy's 13-year-old granddaughter, what do you call a sacred cow? A cow herd. A cow herd. You call it? Oh, a scared cow. Sorry, I read that wrong. A scared cow. A coward. All right, I was trying to see what's the sacred cow. I like the one why cows have to wear bells, JQ, because their horns don't work. Okay, now back to nothing magic. The big price move should be indicating a 45 degree. Now in this case, we were already at the top. So what would be our analysis? Well, this 45 degree should have been in progress until they came back down through that level. That told you the 45 degree wasn't there. Tony, the adage is that the gaps always get filled. And that's pretty much true, except for the fact that, let me pick out one. This gap is the beginning of an uptrend. It may get filled. It may get filled in 2 weeks, 2 months, 2 years. We're not worried about that. We're more concerned about what's happening right now until we see a sell signal. Is this the wrong time to be using synthetic covered calls? Michael, I wouldn't know a synthetic covered call if I fell over it. Is it time to use call or write calls against your position? Depends on what the chart looks like. If this opens lower tomorrow, and you were long the stock and you wanted to hold on to it for a while, but you thought it was heading lower, yeah, maybe you sell the 40 or 240s. Is a meeting line a reversal signal that you can pay attention to? Yes. Oh, let me figure this out. Oh. No. A meeting line is also kind of, darn, I'll have to find one. Yes, a meeting line is where you have, let's say you're in a bullish uptrend and it closes at X, and then the next day they gap it up and they come down and close it at X, so you've got a green candle and then a red candle coming back. Yeah, that is a sell signal. Too much risk holding long leaps or stocks. Michael, yeah, I have, through the years, kind of come up with a conclusion that long-term investment holding has gone obsolete. The reason for that is because of the accessibility of information, number one, and the changes of technology. So it used to be true that if you held U.S. Steel or IBM or something like that, you could make good money because there wasn't that many other things out there that were competing against it or changing investor sentiment. That was before the internet. Now everybody has the same access to information as what only the professionals had back when. The only time 40, 50 years ago that you could make a decision was when your stockbroker called you up and said, well, we're looking at XYZ and it's got good fundamentals, blah, blah, blah. Well, you didn't have anything to check that out, so you went on his word. Yes. Ford, GM, yeah, there's tons of them that you can, because technology changes. Yeah, all right. Thank you, Becky. Becky put another link again out. Yeah, if you can, you might want to look at the monthly charts, but remember, a year ago, the electric vehicle stocks just were running hotter than a $2 pistol. And then they fizzled. Why? Because everybody could have access to the information of why they were good when things were going up, and then all the reasons why they weren't good when things started turning around going the other way. So my idea of long term now is somewhere around 3 weeks to maybe 3 months. Now we're getting way off track. So the argument is, well, what about things like Apple or Tesla or Amazon? Yes, those are some that did work, but how many stocks out there did people hold long term 5 years ago, 7 years ago, 10 years ago that just never did anything? When they get out, when they get grid out there, we know electric vehicles. That's right. So you've got definite changes of sectors. Whoops. I know I didn't do that. It's still doing the same thing. Blink. Oh. Oh. So blink. Charging. Not doing well because now there's other people out there. The electric vehicle stocks are doing great because they were electric vehicle stocks. New wonderful concept. Now there's Ford, GM, Volkswagen. All of them are getting into that area. So there's going to be, everybody will have electric vehicles. So the whole dynamics have changed. All right, I'm getting way off topic here. Any other questions on candlestick analysis? If not, Jim, go ahead and do the double line. Oh, Tony, we're trying to keep at least limited to 2. We did Zoo. Macy's was up, so you could be buying that one, but that's one of a few of the retailers that are doing good. DM, that's another big breakout kicker type signal. Could be buying that one. Go to. Whoops. Big breakout. You could buy this one, especially if it comes up through that level. ETR, nothing there. I wouldn't be short, but I wouldn't be long because you're still trading below the T-line. Zoo, kicker type signal. You could be buying this one expecting a 45-degree. AutoZone, nothing there. If you were short, I probably would have covered the short today. You can always reshort it if it comes back down to the 50 based upon that big bearish signal. Advanced micro, you could start going long, but you still want to be cognizant of this resistance level. Needs to get up through there. AMAT, that's probably a little bit more compelling because it's up above the T-line and kind of broke out through this level. Micron didn't do anything. If you're short, you stay short on this one. If I am day trading and watching 10-minute chart, should I trade a lower time frame? Again, Todd, that's up to you. Take a bellwether. Take something that you see as a good trade. Now figure out what other combinations, maybe the 5-minute and the 2-minute. Or if you're only trading a couple times a day, maybe the 10-minute, 5-minute to help enter the trade, and then watch your 15-minute. So use the combination that fits what you're trading. Again, I use the 5-minute or the 10-minute, and then I go to the 5-minute to see if the trade's working. And if I want to get real specific, I'll drop down to the 1-minute to make sure the 5-minute is still working. Bidoo also broke this level, and notice how it did it. Gap up, broke this level. What's your next expectation? Coming back up into that trend channel. Billy, big bullish engulfing. So here's another factor. When do you take profits if you were short? Where do most people sell? They panic sell at the bottom. When they gap this down, that was your alert. Because where do most people sell? They panic sell at the bottom. If they're gapping down, especially in the oversold area, if I was short this, I would have probably put a safety stop right here. But if it came up through there, that gap down was the alert that they were now ready to start coming back up. MTA, all you can do right here is stay long as it stays above the T-line. GNRC, still kind of a nothing chart. It needs bullish confirmation. Bullish confirmation tells you, yep, that would also continue that uptrend. PLTR, look at your reversal. When you were that far away from the T-line, then you had your shooting star, Harami, confirm. If you were short this, I would have probably covered it today. Wouldn't be going long until you see they can get back up above the T-line. Now, nothing yet. It needs, at least you can see that it's basing here off the 50. You buy it if they can close it above the T-line. Costco, another one where I probably would have covered the short position. Anytime you see a doji in the oversold area, a very logical stop is right there. Because if they have enough energy to bring it back up through a doji in the oversold area, that means there's probably a change of direction. So that's where my safety stop would have been to close out the position. Unless they did something big after hours, which we can take a quick look, just so I'm not, whoops, took it back down after hours. So if I closed out here and it was trading back here, this would be a case where if I was in the puts, now I might convert over to a bearish spread. Just because of the risk factor that you're in a much more high risk as you're in the oversold area. NTLA, if this opens positive tomorrow, the doji rule, you can start trading up positive. And VET, nothing there to get excited about. I'd be someplace else. Roblex. That one you can get ready to buy because obviously lots of indecision right here on the 200. I say obviously indecision when you start seeing those dojis and little hammers and they can't get below this level. Now you've got a left-right combo. I would suspect your uptrend is starting if the market heads up. Magic, magic, magic. What are we doing here? We've done Zoo. We've done CERT. I'll do ATLX. Setting up. You could buy this one on positive trading. I don't know what the rest of them are. We did DC or DXCM. Big reversal. Remember, the bigger the signal, the more compelling there's been a change of investor sentiment. And Schnitzer, the fact that they started gapping it up, kind of a morning star signal, but that was more compelling. There's your bullish doji sandwich up through the moving averages, and then they broke this level. I would suspect you're heading for wave 3. U.S. Steel moving up nicely, and Steel Dynamics also has that strong bullish flutter ticker signal breakout. Look for wave 3. BBAI, nothing. I don't know if you could be short this. I wouldn't be a buyer of this until because you've got a piercing signal, but you still need to get above the T line. CDIO was your message that has worked. Now you just have to be a little bit aware of the fact that you're that far away from the T line. So tomorrow if they open this positive and started trading positive, I'd be trading it off the 10-minute chart. NIO, trying to bottom out with a piercing signal, but if you cover your short on positive trading tomorrow, you still don't buy it until they can get back up above the T line. What was Google? Google was starting to head up. You could see how it was basing after gapping down in the oversold area and doing a doji. You could buy this one on positive trading. Just watch to see what happens once you get to the 50. Boil, that's natural gas, still heading higher. IC, there was another day when they zoom it like this. That's where you go to your 10-minute chart. Right now, if you're long, stay long. But if it opens lower and starts trading lower, close it out, and then you can always buy it back when they come back up through that level. Tesla is now nothing. It was nothing. I wouldn't be long or short Tesla. Now, if I was going to short Tesla, if it comes back down, if you're short, you stay short. If you're thinking of going short, if it comes back down through today's open, that tells you that force is still in progress. ENPH, that's kind of a nothing chart. That's a nothing chart. That's kind of a nothing chart. Wouldn't pay attention to this one until they can get it back up through this level. Goldman, nothing there yet. However, you do have a piercing signal in the oversold area, right about the same levels they were bottoming it out before. If you were short, it has to open lower and trade lower to stay short. If they open it positive, at least you probably suspect they're going to bounce it back up to the T line. And NVIDIA, if you're long, you can stay long. They've never closed it below the T line, but I probably wouldn't go after it aggressively until it comes back up through this level. And golfing candle. Robert, you got me there. Bonus Thursday question. What do you call a cow that just had a baby? All right. We're waiting with bated breath. I take it you've got young kids. JQ. Laser, just stay long. We did this one. If it opens up here, watch, because it's breaking out through this level, watch for wave 3. As a matter of fact, I've written this one up in Tasty Trade magazine to be a buyer if it comes up through the 2750 level. So if it's opening up right about in here and starts trading positive, you can be buying and then make sure it gets up through this level, because that would essentially do your classic pattern, your fry pan bottom, J-hook pattern. Costco is down, yes. Oh, I don't know, did we? JQ, did you give your answer yet? Would you say Google could be a cradle pattern? Not quite. You could put it in that classification, but usually that candle is a big candle. It basically is just telling you they have done some basing here. So you can buy this on positive trading, but then you don't let it close back below the T-line. And LRCX, nothing here. Yes, that is a nothing chart. Now, if this does start showing good strength from here, yeah, you could be buying it with the idea you're wave 1, wave 2, right back to the 50 starting wave 3. Okay. Remember that JQ decaffeinated. Either you have kids or JQ you live on a farm. Gopa, that's still kind of a nothing chart. And Neo, just stay long. Your 45 degree is in progress. So Magic, anytime you see that big move, figure a 45 degree, and it's very easy. Kyle's scared it is far. I can see that. That big move, especially a best friend signal, will create a 45 degree. All right. Again, Saturday, you get a lot of insights on how the math applied to candlestick signals and the math applied to the options to trade them are much more beneficial when you can get the chart and then figure out what would be the best option strategy to go with it. All right, everybody, kept you way past your bedtime again. We'll see everybody bright and early tomorrow morning. We'll see you then. Okay. Okay, coming in still. All right. I'll switch screens when we get done here. So. Yeah, I'll try to. Okay. All right. Here we go. Hello, Becky. Good evening, everybody. Kind of a chilly. Oh, we're already in March. All right, we might be seeing a change of investor sentiment going on right now in the markets, which means we might have to change some option strategies. So as we can see, when they broke down through the wedge, the Dow sold off pretty hard. But today we had obviously a very positive trading day, a morning star signal. But we're kind of in a transition stage that notice where they couldn't close the Dow today. Still closed it just below the T-line. Now that might be splitting hairs, but remember, we've got a very strong statistical probability that if they're closing below the T-line, we're still in a downtrend or investor sentiment hasn't changed yet. So this transition phase, and I should have changed this to engulfing. We had a bullish engulfing signal in the NASDAQ. Stochastics in the oversold area. But we're still below the T-line. So even though we might see some positive trading, we still have to have that final confirmation. And yes, the S&P did a bullish engulfing left-right combo off the 200. But we still need that final confirmation. So now that final confirmation may not happen tomorrow or the next day, but what it's kind of telling us, and now that we're in an oversold condition, we're starting to see a change of investor sentiment. Maybe it will take off right away, maybe it will take a few days, but you can see there is buying or indecision down at this area. Now that indecision can be illustrated in charts like Google, where you started seeing a lot of indecisive trading, doji, kind of inverted hammer, doji, then a left-right combo. Well, that would have told us definitely if we were short. Remember what our first clue is that there might be a change coming? Look how they gapped down the doji in the oversold area and then traded positive from there. Remember, where do most people sell? They panic sell at the bottom, and that's where the Japanese rice traders say when you see a gap down in the oversold area, start watching for a reversal. Now, when the biggies start changing direction, that might be also an illustration that there's new confidence, a bullish confidence coming into the market. But that's not being demonstrated across the board. You can see in Amazon, nothing yet has changed the direction. However, we can start seeing that there's a change of the nature of the market, meaning starting to see some buying occurring. Now, we can take advantage of that, where we can see like a J-hook, fry pan bottom, and we know that a trend kicker signal usually illustrates a lot more upside based upon a bullish trend kicker signal. And so if the market is turning over, or at least in a transition stage where it might be bottoming but not heading up just yet, we can still take advantage of which charts are showing the strongest bullish sentiment coming in. So GSL was one, and the nature of the market is any positive earnings reports are usually creating a reaction that allows you to pick up some good trades over the next few days. AI, that's what is it, C3.ai, artificial intelligence, had closed up here after hours after their earnings. Now, what's that tell us? If it starts opening here and trading positive, basically we've got that best friend signal breaking out through this downtrend, and we're in market conditions where anytime we're starting to see that best friend signal, there's usually more follow through. So we've seen that, and again, I kind of keep stressing, this is the advantage of having a chat room where everybody's looking for the same signals and patterns. Oh, I should know who pointed this one out yesterday. That made for a very strong move today. A few days ago, it was Mux, best friend signal, bullish confirmation. Yesterday, it was Nerdy, best friend signal, bullish confirmation. These are the likely starts of good trades, not because all of a sudden they've become good. It's because the nature of the market right now is rewarding these best friend signals with continued upside. Again, not every chart or every trade is showing bullish influence. still short Rivian because of the dumpling top, the bearish kicker signal, and today it traded lower, did a doji, but this sets up for a very strong trade that if it opens lower and does a bearish doji sandwich, what's it telling us? This bearish dumpling top is now going to start a lot of pressure to the downside. I know, I mentioned all of them, Magic. I make it a point so that you aren't rolling around not knowing. It was Dual, D-U-O-L, pointed out in the chat room. Now, let me ask you this. Do you have eyesight problems, Magic? Could you not read that? Every chart that I do, even if it's got the name on it up here, I print it right here big so everybody can see it. We also have Netflix. Market was up strong today. This closed as a doji, telling us that if they open this lower tomorrow, creating a bearish doji sandwich, that makes for an excellent short. And this is what we're going to be kind of emphasizing on Saturday, is what strategy should we be using right here as far as an option trade? Well, you don't want to be buying puts because you're already in the oversold area. So this is where we kind of look at kind of where we decide maybe we're going to do a bearish spread, put spread, much more viable at this point. So whenever we're in a market transition where we could be heading up, we're not confirmed yet, but we're probably in the oversold area, that's where it becomes very important to see how the market's open tomorrow. Now, if we wake up and the pre-market futures are showing the Dow is going to open up down 120 points, well, that's pretty much telling us we're still in a downtrend because they're not going to come up through this level. If they looks like the Dow is going to open up another 120 points, yeah, that tells us this is a reversal signal confirming. So with that in mind, again, Saturday we're going to be doing a mini spotlight training on what the advantages are of the specific signals and pattern option trades. So these, even though they're short, meaning they're scheduled for an hour, but we usually go at least 2 hours, come join us, get a lot of information. So with that, we've got option trade setups in the specific market directions. Let's see. Okay, and Becky just put in the link for that. All right, so now we're going to move to live charts. Let me see if this works. Whoops, how close did I get, Jim? Not very, okay. All right. Well, I'm going to do this then. I'm going to turn off this and